Hello, Maverick traders. Welcome out to your currency recap. It's August 5th. Corey here with you, and boy, do we have a lot to cover. Let's get into it. We're going to talk about meaningful news in the markets today. There was a lot going on. This unwind of the yen carry trade continues. There's just volatility galore. We got to make sense of it together. And then we're always going to highlight our very best setups. We'll talk about where money's rotating and where those opportunities lie.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was just a day of volatility, so much so that we had some enormous moves. So we've talked about this unwind of the yen carry trade, and it's significant. Look, there's billions and billions of dollars tied up in this, and it's a two-part trade. You're short the yen, you're long risk assets. As the yen has been skyrocketing, the short coverers have come out. They have to cover their short. That can create losses. They have to sell the asset on the other side. That can generate losses. It's highly leveraged, as the currency markets are, and there's just probably somebody blowing up somewhere. So I don't know if they'll write books about it or whatever, but there is something going on behind the scenes, and there's no question global central banks are in meetings and in discussions about what's happening with this and where there might be contagion. Volatility index spiked to its third highest level in the past 25 years. In a way, the VIX moved more than what equities went down. The VIX kind of overdid it. I mean, we're not collapsing in stocks or the economy like we were in the two prior higher spikes. We had a higher spike in 2020. Well, that was COVID, and the entire world was shut down. We had a higher spike in 2008. That was the global financial crisis, and Lehman and Bear Stearns had collapsed. So today seemed a little out of pocket, that the VIX went up more than what it really should have, given what we're seeing in terms of volatility in equities. So it kind of spiked a little more than what the damage was done in stocks. But having said that, there's still some real risks out there, and certainly crypto took it on the chin. Many of the crypto markets were down 10, 15, 20%. They bounced back some, but there's risk of further selling in a variety of different assets. That's the thing about selling, is there can be forced liquidations. It's not that people want to sell, it's that if you're utilizing leverage, well, the brokers and so on, they may force liquidations, and there's real risk that there's kind of some contagion spreading throughout the markets. And look, with the VIX where it's at right now, it suggests that there's going to be a lot of volatility to come. So as we've been seeing, the trend has been upper movement for the Japanese yen. You could overlay a chart of the Japanese yen and the NASDAQ, for example, these large cap tech, and they're moving inverse. Every day that the yen goes higher, that thing goes lower. When the yen has pulled back for a day, they've bounced. So the yen is driving this, and it's a big story. Now, I think people probably want to blame the Fed and say, well, the Fed didn't cut rates last week, and that's why this is happening. I think that's overdoing it. Do we really think that the economy is so fragile and that markets are so fragile that if the Fed doesn't cut by 25 basis points, everything collapses? That's not reality, right? So could they have created a little more selling because they didn't cut and because they delayed it until September and so on? Maybe a little bit. Maybe they're a little bit of the volatility, but I mean, I don't think that they're the sole cause of what we're seeing. Other currency markets, as we've talked about, these risk-on currencies, the Aussie, the Kiwi, they've been selling off. But we did see some long tails. We did see some big bounces off of the lows, suggesting again that today's move was kind of overdone. That volatility index overdid it a bit. S&P, global markets down about 3%. Crypto down 7%. gold down 1, oil flat on the period. As we look at crypto, Bitcoin, Bitcoin Cash, Ethereum, Litecoin, they were all down. I mean, there's nothing in the crypto space that held out. It was all widespread selling. So we've broken the 20, we've broken the 50, we're selling off. Where does this take us? Well, certainly we're in a bearish trend at this point, and we talked about this last week. I talked about that I expected you'd get a little bounce and then more selling to come, and it's really what's played out perfectly. Well, here's the thing. You'll get some bounces, but I still think there's more selling to come. I would compare this VIX spike going to 60 a little bit to 2008, in that back to 2008, the VIX peaked in 2008, but equities didn't bottom until 2009. So in other words, the VIX overdid it and then started to trend down some, but equities also went down and had more selling. And that's what I would expect here. I think the S&P and the VIX are both kind of going to meander to the downside. And look, there's going to be more volatility, not less. If we look at what's on tap, the Aussie, will they cut rates? What are central banks to do? Well, I think certainly the Fed is going to cut rates, and there's a lot of talk about whether they'll do an emergency cut and get one out there before September. I would hate to see that. I would think that equities and currencies might react to that for a day or so, and then there'd just be more selling, because that to me would show the Fed is in a panic and that maybe there's something more severe behind the scenes and so on. So the Fed should not be reacting to this stock market sell-off. But will central banks, will the, Royal Bank of Australia cut rates? Will they react to some of this data? We shall see. Let's look at some charts here together. Now, if we look at velocity, certainly Japanese yen surging to the upside. Euro and Swiss franc a little bit more positive. All of the crypto space, US dollar, British pound, the risk on currencies, they're all trending lower. And right now, in terms of velocity, the US dollar is picking up some pace as we were coming on to do this video. So if you look at its velocity, it's really, on a 4-hour chart below its 13 EMA, downward sloping RSIs and so forth. So let's make sense of some of these things together. Well, first, what was happening was this Japanese yen spike. This is the driver of it. Just as we saw long lower shadows in a lot of risk assets, we've got a long upper shadow in the Japanese yen. So these tend to be a little bit of a peak type of scenario. And the yen, again, moves kind of like the VIX. So do I think there's a little area here where the yen can back up for a few days, consolidate, something along those lines? I do. This would be a natural area for the markets to bounce for a couple of sessions or something like that. Having said that, I don't think it lasts. I think this is a downtrend that's just emerging, that we've got lower prices and equities coming, that we've got more risk off, but you got to pick your spots. And today we had this extreme blow up. It's really a perfect day to take profits on short positions, on longs in the yen, on things along those lines. So I think logically it was a little bit of an exhaustion day. The volatility index, with a VIX up at 38, it suggests that stocks should be moving about 2 to 3% per day. Again, we're going to see a lot of volatility. So will the S&P move around a couple of percent tomorrow? Yeah, I'll bet it does. And a couple of percent the day or so after that probably does. And so we've got more volatility coming. But again, long upper shadow here, probably an area where some risk on can bounce just very, very short term. And I'm talking a day or two. Do I think there's more to come, more selling overall? Probably so. So Bitcoin is an interesting chart. You spike down, you can see the lower shadow. We came back to this low. So let's draw up a scenario of this risk on, risk off dynamic. What I'd love to see in Bitcoin here, now that we've plunged to the prior low, is a small bounce, an inverse cup and handle. If we do the math, the upper end of the range was at 70,000. The lower end of the range down here is at 54,000. So the size of the inverse cup is 16,000. That's the difference between the top of the cup and the bottom of the cup. Well, in a cup and handle, we know the handle is usually about 30% of the size of the cup. So if the cup is $16,000, right, 16,000 in value, 30% of that is 4.8 thousand, close to 5. So from 54, a bounce up to about 59-ish is kind of where I would expect that Bitcoin can bounce. If you get a little bounce in Bitcoin up to about 59,000, I think that's the next pocket, the next space where some aggressive selling comes in and a whole nother leg emerges. That's an excellent risk to reward shorting type of opportunity. And I wanted to show this chart because there's a lot of other things that look very similar to this. You have plunged back to the lows from a couple of months ago. A small bounce here is logical that that would materialize, but even if we get a small bounce, I just don't think there's a lot that's going to be behind it. I suspect there will be more selling to come after we get this little bounce for a week or two. So, pessimism I think is warranted. We don't know how bad it is, and you just have to be a little bit skeptical because the trends are down. When the trends are down, we want to ride those trends to the downside. So look for things that are trending lower in the crypto space, in the US dollar, in the British pound. And of course, you can match it up with some of the European currencies or the Japanese yen. My idea would be to hopefully get a small pullback in the yen and a little bit of bounce in these other assets and then initiate that trade. So a little bit of patience here, but I think it's coming. Hope you enjoyed this currency recap. Stay safe out there, everyone. We'll see you next time.